one should you go for? Zenith Bank or GTB? Beyond the public offer price, there are parameters you need to look at. So in this video, let's go ahead and look at it.
Let's quickly do some analysis on which one you should choose. This is not a matter of should I buy. It is not a financial advice. It is just my own opinion, and we are going to do the analysis together. We are going to look at it. What really matters? What metrics should you look at when buying shares, especially when you are considering buying shares from a company or companies from the same industry? There are parameters, there are metrics you need to look at. So that's what we want to look at in this video. So quickly, let's look at it. I need to first say this, that the most important parameter, metrics you need to look at is the price earning ratio. The price earning ratio. I'm going to come back to that. That is the last thing we're going to look at. But let's quickly look at the remaining ratios. Let's quickly look at the remaining metrics, which is the earnings per share. Let's look at the average share price. Then we look at the dividend paid. We look at dividend pay ratio, then the dividend yield. So looking at the earnings per share, we can see that from 2019 till now, till 2023, their earnings per share, I meant to say, has grown, especially from 2022 to 2023. It grown from 7.1, 6.0 to 19.1, 21.6, and that's a good indicator to look at, even though you don't rely solely on earnings per share. It's not something you should rely solely on. Aside from other parameters, metrics that we look at as accountants and as investors, which is the ROE, which we call the return on equity, the return on assets. Just these basic ones, you are good to go once you know this. So just like I said, the earnings per share, you can see from 2019, it has grown. You can see the trajectory, especially 2022 to 2023. It took a quantum leap in 2022 going into 2023. So you can see this. So that's earnings per share. Then let's look at average share price. Average share price, in the earnings per share, there's no much difference. You can see that there's no much difference. But when it comes to the average share price, look at the average share price of Zenith Bank in 2019. Compare it to the average share price of GT in 2019. The average share price of GT in 2019 was 30 naira 7 kobo, while the one of Zenith Bank was 18 naira 8 kobo. So which means at that point in time, if you bought Zenith shares, by now it has doubled, because currently, according to the market price, it's currently being sold for 38 naira. It has doubled. So aside from the dividend, which is in form of cash flow, you also have capital appreciation. So those who usually debunk the aspect of real estate, who usually say invest your money only in real estate. Real estate is good, don't invest in shares. To me, I believe that multiple streams of income, and whatever you know, whatever you want to invest in, just make sure you know it well. Don't buy at the top. The goal when you are investing is to buy at the valley, is to buy at the bottom, then you sell when it is high. So just imagine someone who bought when it was even 2019, then selling now. And don't invest your money in whatever you don't know about. And that's why we try as much as possible to come and enlighten us on what are the things to look at, even when it comes to real estate, when it comes to shares, we'll still be talking about crypto as well. I invest in crypto, and I will also be sharing my opinion on it. What are the things to look at when investing in them? Because many people, they've not invested in it. They only try to rubbish whatever people are doing, that it is a useless investment. As long as you know it. The first rule of investment says that investigate before you invest, which means have knowledge, investigate, ask questions. The number 2 is make sure your money is safe. So as long as that investment vehicle, your money is safe, then it is key. So just like I said, 2019, you can see it is 18.8 for Zenith Bank, while for GT it was 30.7. And as at 2023, you can see that the the share price of Zenith has grew up to 30.8, while the one of GTB as at 2023 was 30.6, but currently 2024 the market price is 45.80. But in all, we can see that Zenith Bank is doing well, has been doing well far more than GT. You can't compare it. So has been doing more than, they have been doing fine, more than GT. Then we look at the dividend paid. You can see that Zenith is 51.6. This is cumulative, 51.6, while for GT the cumulative is 48.4. I'm still going to take us to my Excel sheets where I calculated, I will try to break it down in nitty-gritty. You understand, okay, if you invested 1 million naira, what is it going to be your dividend? What is your return on investment? I'm going to break it down. So then the dividends payout ratio, which means when they make money, how much do they pay out? How much do they pay to their investors? Because every earnings they make in a year, they usually divide it majorly into two, which is, we call one retained earnings, then the next one is the dividend. They pay out dividend, then the remaining is retained back into the business, is plowed out back into the business. So you can see that right from 2019, it has been an average of 40%, so which is good for both banks. It's good for both banks. Except in 2023, and the reason for this is the FX, the windfall in FX, the gain they recorded. It was they were being told by the government that they should not pay dividend to shareholders from that gain from foreign investments. I think it is called abnormal gain. So they said they should not pay dividend out of it. Then you can see the dividend yield as well, which means Zenith Bank has done well when it comes to dividend yield over the past years. This is the cumulative. The Zenith Bank has done well. Then let's come back to the price earning ratio. The price earning ratio, simply in the layman language, helps you to understand if the share price of a company is being overvalued or undervalued, which means, is it cheap or is on the high side? Is it cheap or is expensive? It is the price earning ratio. The lower, the better. I say that again. The lower the price earning ratio, the better. The only thing you need to look at as a complementary to the price earning ratio is that as the earnings per share grown over the years. So in this case, it has grown. Okay, so let's now move back to price earning ratio. You can see that in 2019, the price earning ratio of Zenith Bank is 2.8, while the price earning ratio of GT is 4.4. Then I said the lower, the better. The closer to 1, the better. So which means in 2019, Zenith Bank was better. 2020, Zenith Bank was better. 2021, Zenith Bank was better. 2022, at least a little bit competitive, but you can still see that it's a little bit better. I will make a comprehensive video and I will cite an example of how price earning ratio works so that you will understand. I'll try and compare two companies. I'll break it down how we really calculate the price earning ratio. It may not be next week, but I'll put it in the pipeline. So you can see in 2023 the price earning ratio. So looking at the price earning ratio, so Zenith Bank is a good investment when compared to GT. So let's now move into my Excel sheet. Let's see what I have for us there. So we have two investors. We want to compare two investors. Let's say Mr. John is investing in GTCO, while Mr. James is investing in Zenith Bank. As of 2019, let's say they both invested 1 million naira. They both invested 1 million naira at a share price. The share price of GT then was 30 naira 65 kobo, while the one of Zenith was 18 naira 80 kobo. 1 million naira will get Mr. John 32,626 numbers of shares, while for Mr. James it will get him 53,191. Now, at the end of that year, the dividend paid per share for both banks were 2 naira 80 kobo. paid the same dividend. Just imagine. So that's why I said over the years, the track record, the metrics are shown that Zenith has been performing better, especially has been rewarding investors in terms of the investment, when you compare the two of them. So 2.8 naira. So by the time you calculate the dividend received, you can see for GTB it is 91 naira, 91,353. While the one for Mr. James from Zenith Bank is 148,935. So if you look at the percentage return on investment for GT it is 9.14%, while for Zenith it is 14.89. So you can see that still Zenith beats GTCO. While when we look at it now, as at then, don't forget I mentioned in passing that two ways to make money when it comes to investment, especially investment in shares, it is through number one, capital appreciation, and dividend payments, which is the cash flow side. So don't forget, they've both been receiving dividend at the end of the year. They've been receiving dividend. Now, this is now capital appreciation. The 1 million of Mr. John then has appreciated to 1.4 million, 1.494 million. While the 1 million naira of Mr. James then has now appreciated to 2 million, which means it has doubled. It has doubled. So I hope you understand. So which means if you are to choose between the two of them, which one should you go for? From this, I think you should be able to decide. You should be able to decide. That's why I said, let us quickly run an analysis together. Let's quickly run an analysis together. So, and already GTCO, the public offer has already closed, while the one for Zenith is still out. It's going to close on 9th of September. I just got some shares today from Zenith. So if you are interested, you can get it through their app, especially if you are a banker with them. If you bank with them, you can invest through their app. Once you open it, you will see it by the side. By the time you click on the Eclipse, you will see it there. Then you can click and buy from there. So you can see they are currently selling at 36 naira 50 kobo. Now let me quickly say some things as regards this investment. When you are investing in shares, make sure it is for long term, not for short term, please. Make sure it is for long term. Don't do short term. Shares does not make sense in a short term. You are not a trader, you are an investor. So it doesn't really, because it's possible there's something we call market correction. It's possible we still have market correction. Prices may still have to come down a little bit before it picks up. So those are the things you need to be aware of. So invest in it for long term, not short term. I think with this, I'll be able to enlighten us on which one exactly to choose between GTCO shares and Zenith Bank shares. I'll also be doing an analysis on Fidelity and FCMB. Those are the two banks in the same range that we can talk about. So if you are yet to subscribe to this channel, kindly do by clicking on the subscribe button and click on the notification bell so that you can be notified whenever I release a new video. Till we meet in our next video, stay blessed.